What's going on, everybody? DJ Minds here, talking head video today. Low budget. There's going to be no visuals or anything like that, but just straight from experience and talking to you guys. And let me know if this is okay. Please like this video and consider subscribing. Okay, so we're going to be talking about stocks versus crypto. Now, I'm not talking about crypto mining or anything like that. I'm talking about like crypto trading or long-term trading with crypto. Now, I personally am not a huge fan of short-term buying in and out of the market, trying to time the market. You can certainly do that, but about 90% of traders lose their money statistically. You can look that up. You'll see anywhere from 80 to 95% of people will lose their money. So if you were to take a room of 10 people, 8 or 9 of them, depending on the source that you look at, will lose all their money or most of their money. So really think about that. That's why I'm not going to recommend you start day trading. But yeah, to talk about the stocks. So kind of what is a stock? Like, is this something that's good for you? Okay, let's take Tesla. This is one of my favorite stocks. I have been an investor of Tesla. I think 2017 is when I really just kind of kept all the Tesla and still holding it to this day. But I was trading it back in like 2016, short-term flips and stuff, but really started taking it seriously in 2017. So let's talk about Tesla, for example. If I buy one share of Tesla, what am I really doing? You're kind of buying a piece of the company in a way, or some kind of power, like voting power in it, right? It's a tangible thing. I can look up a quarterly earning or an annual report on Tesla. I know who their CEO is. It is Elon Musk, right? I can learn how many cars they're selling, what they're projected to sell. There's a lot of things that you can do research on when it comes to a stock. In my opinion, stocks are significantly cheaper than cryptocurrency. I mean, significantly cheaper. And we'll talk about the safer cryptos, but I don't know if there's any safe crypto necessarily. But like, you can learn a lot of things. You can look at the balance sheet for a stock, and that's really comforting to look at. It's not always going to work out, of course, right? Like, you got to get really quality stocks. You're not trying to buy this little penny stock. A penny stock, depending on who you ask, is anywhere under $5, but it's generally seen as like a brand new startup project or a startup company. So this isn't going to be ideal. These are not what we're talking about, guys. We're talking about Nvidias of the world, you know, your Amazons. Some people really like Apple, stuff like that. So that's going to be the kind of things you want to focus on for sure. Not saying you should go out and buy those, but that's kind of the example there. Now, the bad part about stocks is you kind of need a lot of money to make money. I mean, that's no surprise. Anything in life, not anything, but most things you're going to need money to make money. And certainly, you know, you got to keep your expectations somewhat reasonable when it comes to stocks. The S&P 500, which is the 500 largest companies of America or in America, they are generally, if you were to just buy the S&P 500, you make about 7, maybe on a good year, 10% of your money. And that's really solid gains, guys. That's what we're talking about when we're talking about stocks, is making about that 7 to 10% of the gains there. And that's going to be manageable for you, and that's going to be something that you get excited for, is making those type of gains. Now, you have to understand with inflation being anywhere from 7 to 10% a year as well, just keeping your money in something like a savings account, you actually end up losing money, right? And that's where stocks come in, and you buy something simple like S&P 500. You don't have to worry about it. You just get the top 500 coins, or excuse me, the top 500 stocks, and you're pretty much done with it. I'm not going to recommend that unless you're really a lazy person. Again, a lot of people do it. Multi-billionaires and millionaires do that because they're already rich, right? But you, as someone who's starting off, I'm just assuming if you're watching this, your net worth probably isn't really that high. Maybe you have $1,000 or $5,000, or maybe some of you have $20,000 or $30,000, and you're kind of figuring out, where should I start? Okay, I think for sure the most important thing, firstly, is going to be your age. In my opinion, not financial advice, guys, don't take this to heart, but this is just my opinion. The younger you are, the more risk that you're going to be able to take. Okay, so if you're watching this and you're 16 or 18 or whatever the legal age for trading and buying stocks is in your country, in your area, the younger you are, the more risk you can take. So, for example, if you were to buy something like McDonald's or Walmart or something that's been around and kind of proven over time, you know, these things, Coca-Cola, right? These kind of stocks are so safe, but you're not going to get a lot of money from them, right? Like, I don't see Coca-Cola all of a sudden 2xing your money, 3xing your money or something, you know, wow, I just made whatever amount of money. It's not going to be a significant life-changing amount of money, right? So that would be better for someone who's older, right? Maybe you're in retirement years, you're an elderly person, or maybe somebody who's like super, super safe. But when you're young, man, you got to take risk, right? You got to buy a lot of these tech companies, in my opinion. Tech companies are the way to go overall from my personal experience. I started off not really on tech companies. I bought things like Cisco, which made me like 20% gains, and I was really happy with that. And there was a lot of other, more established, kind of blue chip, older people stuff. And 20%, 30% was amazing, right? Because again, S&P 500, if you were to just buy that, the 500 largest companies in the ETF or something, you're gonna make 7-8%. So you're definitely beating the market, but you're not really changing your life. How you're gonna change your life is taking on more risk. And this is gonna be better for people in their teens or people in their 20s, or certainly people in their 30s. They can afford to take a lot more risk. They can buy NVIDIA, they can buy AMD. These are technology companies. Tesla, which I personally, I can't recommend you buy anything, but for me, Tesla's my number one stock, has been for years, and I don't think anything will compete with it when it comes to like 2030, 2035. Long-term investing is the way to go, right? I know that's not sexy. A lot of you want to hear, how can I get rich tomorrow? This isn't the channel for that, man. I don't know how you can get rich tomorrow. Maybe you'll figure that out, right? Not saying that I haven't ever day traded. That's what it is, right? When you're just trying to get in and out and you're trying to get these large spikes, right? You're trying to just time the market. You just think you're a genius. That again comes down to, over time, 8 or 9 out of 10 people are going to lose all their money because you just tried to be so smart. If it was that simple, man, people would just day trade, right? They wouldn't buy any other stock and just kind of hold it and wait a really long time. They wouldn't do any of that, right? They would just day trade if it was so simple. But you're going to get burnt. Trust me when I say that. So back to the age thing. If you're 20s, 30s, teens, you should really heavily be going into technology companies, in my opinion. You gotta do some research on that. If you want me to talk about the 10 best technology companies, let me know. Maybe we'll talk about that. Facebook's okay. I think they call it Meta now. There's some other good brands as well. If you want a safer technology company, it'd be Apple. I don't think that's going to get you rich these days, but it's a good one, right? Now, as you start getting to like your 40s, into your 50s, you got to tone it down for sure, right? Because you don't have that much longer until retirement. And the benefit of being young and starting young is, even if you lose all your money, it doesn't really matter, right? Because hopefully you have a job and you're going to get that money right back, right? As that happens in your 40s, your 50s, you probably have kids, you got a mortgage, you got things going on in life, right? I get it. I'm a little older myself. I'm 34, right? So I get that. I get how life is. I have a couple kids. I'm married and all that. I totally understand how life can be. So yeah, as you get to your 40s, your 50s, you got to slow down the risk. Me personally, when I'm 40 and 50, I'm still going to be taking risk, but it's not going to be, buying Tesla when it first comes out like I wanted to, or kind of have for the last whatever amount of years or anything. I'd be slowing it down, looking for something still with some risk, still definitely with some upside, but I wouldn't be going all in on these brand new companies that are making robots and stuff. Like, that might be a little too crazy when you're in your 40s and 50s, but hey, maybe you don't care. Maybe you're YOLOing it. I hope you don't YOLO it as you get older. Okay, so now let's talk a little bit about crypto. I'll come back to stocks as well. Cryptocurrency, man. Crypto has changed a lot. We're in the year 2024. I think at the making of this video, it is the 21st of July. And crypto recently is much safer than it was, depending on kind of what crypto you get. For example, Bitcoin. Everybody knows Bitcoin at this point. But I'll tell you what, 5 years ago, a lot of people didn't. 10 years ago, most people didn't know what it was. And now, the United States, China, all countries all over, Europe, I believe Australia, are getting ETFs, right? ETFs, they're trading it. It's public now. Like, anybody can buy it. It's more established, right? So it's not like the Wild Wild West like crypto once was. Bitcoin, not to get into it on this video, but it was pretty crazy 10 years ago, right? But it's not like that anymore. So the safest bet for sure, by far, if you want to get some serious gains, but you also want to be safe, you're not going too risky, is going to be Bitcoin. You're not going to fail. I can't say that on the internet. I think it's highly unlikely that you're going to fail with buying Bitcoin. If you buy it and it goes down, you hold it for a couple more years, you'll definitely make money, right? That's Bitcoin. It's basically the most sure thing. So I would put Bitcoin in the category of, to compare it to stocks, something safe like an Apple, right? Something like that. It's pretty much guaranteed you're going to do pretty well. But the upside of cryptocurrency is far superior, right? Bitcoin has outperformed gold, Bitcoin has outperformed Microsoft, any company you can think of, besides Tesla, actually. Unless you look at like the all-time, it hasn't outdone Tesla to my knowledge. But besides like very select things, Bitcoin is going to do really well. And the cool thing is you're not going to have to settle for 10, 20% gains, right? With Bitcoin, you can expect over maybe a 4-year period, because there's 4-year cycles in crypto. That's something you need to research. Look up the 4-year cycle for cryptocurrency. You can expect probably a 2 or 3x on your money. And that's a lot of money, right? That's a lot of money. I mean, if you put in 10,000, you should expect maybe 20,000 or 30,000. It could be more, but I also want to keep your expectations realistic as well with something like Bitcoin. That's the safe bet. Okay, so now you've heard about Bitcoin, but now you want to kind of look at something maybe a little bit more risky, because again, Bitcoin isn't really high risk anymore. Great gains, but the gains are kind of, 2, 3x. It's nice. It's good money. But if you want to take it a different step, maybe you look at something like Ethereum. I'm personally not a fan of Ethereum, though I do think that Ethereum, the second largest cryptocurrency, will do really well over time. Then you have other things like Solana. This is a really good one, right? Maybe not as much Cardano, but there's some other like safer bets that are more established. These are billions of dollar market caps. These aren't some off the street project that some guys did in their house or something. This isn't like a startup, right? So that's like the next tier of things. There's a bunch more, man. There's like Litecoin. Maybe some people would consider Dogecoin there, even though that's kind of a meme. I probably wouldn't put Doge in that category, but Dogecoin could technically be in there from like a market cap perspective. But like as you start going down from like the top 20 cryptos, you're going to have other things that are much more high risk. However, the reward can be insane. Things like Kaspa, right? Kaspa, I think at the making of this video, is like the 27th largest one. This is a proof of work project. That just means that people can crypto mine it. You don't have to learn all that right now. It's just to tell you there's proof of work and then there's proof of stake when it comes to cryptocurrency. As a trader, it doesn't really matter. But either way, right? When it comes to crypto, way more upside than the stock market, but also way more risk, except for things like Bitcoin, right? So you got to kind of figure out, how old am I? If I could do it again, which I kind of already had done, if I was 20 years old or 30 years old again, you know what I'd be buying? I'd be buying a lot of crypto, but the safer stuff, like I said, like Bitcoin, maybe a little bit of Ethereum, Solana, stuff like that. Okay, so now getting out of like even the top 100, there are thousands, there's probably hundreds of thousands of cryptocurrencies out there. Should you kind of play with those? This is where crypto gets a bad name, right? Actually, what's kind of crazy, in the top 100 cryptocurrencies, there's a lot of meme coins. I would stay away from these. The only time I would even mess around with a meme coin or some like brand new startup project like this is if it's like $100, right? You feel like gambling. It's crazy. You might have heard of NFTs in 2021. It was literally like pictures of stuff they were selling, right? That's also where crypto kind of gets its bad name. But don't let that hinder you, right? Just be smart, right? Getting good projects. Here's a random project called Flux. I'm just wearing this because it was a free shirt. So it's a much smaller market cap than some of the other coins that I have listed. This isn't something you're going to want to throw in your life savings in, right? You wouldn't want to throw your life savings probably in crypto in general, to be honest with you. The safest bet for sure is going to be some really up and coming, fast building technology companies in the stock world. But there's nothing wrong with messing around with crypto on the side as well. That's what I do, right? I'm primarily in stocks. I have been for 12 or 13 years, right? And I've been doing crypto. This will be my third bull run. So I don't know, maybe 10 years, 9 years, something like that I've been messing around with cryptocurrency. But either way, I think it's really healthy to have both. And as time goes on, I do think more and more people are going to get cryptocurrency. Right now, it's still on the up and coming, right? But not that many people have figured it out fully. Maybe some people are getting 1% of their net worth, or 2% or 5% into cryptocurrency. I've seen some people do 100, which is kind of crazy. They're really living on the edge. But again, it depends. Are you single? Are you married? Are you older? For me, I do both. These days, though, to be fully transparent with you, I would say I'm about 60-40 which is 60% stocks and 40% crypto. Now, what my goal was to be 80-20, and I was 80-20 about a year, maybe a year and a half ago. 80% in the stock world, 20% in the crypto. The thing is that the crypto just grew so much. Like, for example, I bought one Bitcoin for $29,000. I forget if it was a year and a half ago, right? Well, I didn't expect that so fast that $29,000 today, fast forward just a little bit, is nearing 70,000, right? So obviously that took away the percentage of my stocks and increased, my holdings for cryptocurrencies. I've also had some major wins with Kaspa, with Lithium, with ChlorAI. These are just random cryptocurrencies. I'm not saying you should buy these or anything, right? Because they've already ran up and everything. So maybe it's not the best time for you to enter. But the point is that the crypto, right, just grows so fast. I mean, I've got 10xers. I've got some that have 40x'd my money, right? And that's not something you're going to be able to do in the stock world. You're not 40xing your money out there on Amazon. I'm sorry, it's just not going to happen. Could you do it on a penny stock? Sure. But you get my point here, right? You want to have some exposure to cryptocurrency, man, because when these things move and they rally, and believe me, they rally and they will be rallying in 2025. That's really when the bull run's going to pick up. The end of this year in 2024, kind of like that fall winter time frame, I think we're going to start heating up. But 2025, because of the 4-year cycle, the Bitcoin halving cycle, we are going to rally like crazy. So you're going to want some exposure there, man. I personally think you'd be crazy to not have 5% of your money into crypto, something like a Bitcoin, something like Bitcoin, or some exposure to that. The safest bet, in summary, for sure, by far, is going to be stocks. This is something that you can research, that you can visit these companies. You can go visit Volvo. I'm not recommending Volvo, but you could go visit Ford. You could go visit wherever you want, McDonald's and Burger Kings, and kind of see how they're doing and research. Crypto, you can't really do that, right? Generally, they're not going to have a team behind them. There's not going to be an infrastructure, a physical infrastructure anyways, and you're not going to see like a quarterly earnings for a lot of these or anything like that, right? This is a lot more risk. We're talking about new digital coins, right? These are cryptocurrencies. The same way that you're used to having a dollar or a yen or a won from South Korea, whatever you use in your country. Let me know actually in the comment section below what country you're from and what the money is that you guys use over there. But yeah, this is going to be something completely different, significantly more risk, but way more reward. So you want some exposure to that, absolutely, unless you don't want to change your life. If I only had a little bit of money, that's probably most people talking in the comment section. If I only had a little bit of money, I would lean more towards crypto. But over time, you're definitely going to want to get some stocks, man, 100%. But the stocks can be a lot less growth. You're going to be happy with 20% gains, 30% gains, maybe over the course of 5 years, a 2, 3, 4x, which would be really nice, right? Something like that. But you got to manage that on the crypto side as well. I hope this helped. If you want a more detailed explanation, I certainly could get way more in detail, but it's already 20 minutes in. Let me know if you made it to this part of the video. Put in hashtag loofah. Hashtag loofah. I don't know how to spell that. Love you guys. Hope this helped somebody. Peace.